Hey everyone, welcome back to Corporate Decoder, the place where we take dense financial filings and make them, well, slightly less dense and way more interesting. Today we're diving into SMX Security Matters Public Limited Company, and boy oh boy do they have a story to tell, especially when it comes to their finances and their constant dance with Nasdaq's rules. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed and hit that notification bell. We also have a Discord community linked in the description below, so jump in and join the conversation. Alright, so SMX is putting itself out there for more investors to buy into, and that means a lot of disclosures. They're an emerging growth company which, as you might know, gives them some breathing room with what they have to tell us. But even with that, the numbers are telling a story. Let's talk about their financial situation, specifically their cash flow. This is often where the real story is. For the year ending December 31, 2024, they used 14,000 in operations. That's a bit less than the 12,479 they used in 2023, which is a slight win, but still a lot of cash just to keep the lights on. It's mainly because their net loss was a whopping 35,401 in 2024. And what's hitting them hard? Well, in 2024, they had to swallow an impairment loss of 6,813 on their goodwill, plus another 2,075 for amortizing intangible assets and 9,000 to 10,000 for other impairments. That's a huge chunk of money gone because some of the value they thought they had just isn't there anymore. Then there's the cost of being a public company. In 2023, they spent 16,802 just on listing expenses. That's a massive one-time hit, but it shows they're serious about being on the stock market. Their finance expenses, which is basically the cost of borrowing money or paying for various financial instruments, were $13,491 in 2023, mostly because they had to revalue their bridge loans and convertible 23, mostly because they had to revalue their bridge loans and convertible notes. It seems like a lot of their financing comes with significant costs. But hey, it's not all bad news. In 2023, they had a gain of $22,164 from revaluing an investment in a company called True Gold. That's a positive number, but it's also a one-off gain, not from their main business operations. Overall, their net loss for 2024 was $35,401. This is a lot higher than the $20,989 loss in 2023. Even with that one-time gain in 2023, you can see they're still losing money, and in 2024 they lost even more. Now about that cash. As of December 31, 2024, they only had 2,343 in the bank. That might sound like a lot, but considering their monthly expenses and the fact that they are bleeding cash, this is a very tight situation that raises what they call substantial doubt about our ability to continue as a going concern. Plain English, that means they might not have enough money to keep operating for much longer without more funding, and that's why their financing activities are so crucial. They brought in 13,110,110 through financing, mostly from issuing shares and notes. This is how they're staying afloat. Looking at their balance sheet, we can see this struggle. Their total assets are 43,529, but their total liabilities are 21,137. That leaves them with total equity of 22,000, but a huge chunk of that is accumulated losses of 82,000 to 26,000. They also have 15,981 in non-controlling interests, which means other people own a significant portion of some of their subsidiaries. Despite the losses, they've managed to bring in a lot of money through issuing shares, as shown by their issued capital and additional paid-in capital of 89,976. That's how they fund their growth and operations. Now let's talk about the risks, and SMX has a lot. They admit a market for their securities might not continue, which would hurt their stock price, and if analysts stop writing about them, that's also bad news for their stock. They also point out their limited operating history means more risks and it's hard to predict their future. They are also facing tough competition, and if they can't keep up, they'll lose money. One of the really unique risks they talk about is their markers contaminating materials. This could lead to product liability claims and damage their reputation. That's a pretty specific and concerning risk. And to top it off, they explicitly state in their financial statements that there's substantial doubt about our ability to continue as a going concern. This isn't something companies say lightly. It means they're really worried about staying in business. On top of all this, they've had trouble with Nasdaq's rules before, like the minimum bid price requirement. They've regained compliance, but it's a reminder that they're on thin ice and could be delisted if they slip up. That would make their stock even harder to sell, and that's saying something. So here's the story of SMX. They have some interesting technology in the brand protection and track and trace space, aiming to help with sustainability and the circular economy. They've managed to get listed on Nasdaq and are raising money through various deals, but the picture is still pretty murky. They're burning through cash, face serious operational and market risks, and are actively trying to raise more funds just to stay afloat. The risk of not continuing as a going concern is very real here. What's my take? SMX is a high-risk, high-reward situation. Their technology sounds like it could be useful, especially with the focus on sustainability. However, the continuous struggle for funding, the recurring losses, and the significant impairments are major red flags. They're essentially betting on future growth and market adoption to turn things around, but the immediate financial health is concerning. They need to find a path to profitability, fast without further fee, fast without further dilution to turn things around. But the immediate financial health is concerning. They need to find a path to profitability, fast without further diluting their existing shareholders too much. Alright, that's our breakdown of SMX's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.